Welcome to Java. Thank you for joining me. It is October 14th, 2024. It is also Monday, as well as a holiday in the United States. It is Columbus Day. With that, the New York Stock Exchange is still open, even though the bond market is closed. So we're not going to have the 10-year yield basically as a guide with movement with that, but we've got plenty of other things to look at as well as speak about this morning. So let's get started. We'll start as always with the risk, because that is basically, as a trader, you are managing your risk. So the MMRI 262.2, it hasn't had any major movements lately, but it is rising slowly. Now with this, the fair grade meter is solidly in the grade territory. There's quite a few retailers still basically piling in and trying to gamble, if you will, make money off of what they see as an easy opportunity to make this money. So with this, we add the 10-year yield. Relative strength of the dollar is growing in strength today. Okay, so with this, we're watching basically some of the foreign markets. What is driving this is the Chinese, basically easy money. They're flooding more yuan, trying to get more loans out. A lot of stimulus coming from that side. So with that, the European market was mixed, but the Asian market, especially the Chinese Hang Seng, is up green on all of the stimulus, very similar to the Fed cutting rates in the United States. Now we've got oil weak, basically on Middle East, basically talking about the supply. So they're looking at increased supply, weakened demand. And right now, the surprise there is that the political tensions are not pressuring it more. So with oil going down a bit, we're watching the volatility index also kind of coming down a bit. We've got stocks in the green so far, it looks like, to open, and the futures are pretty much flat, really. So it could go either way. So with this, I just want to say that inflation, as it continues, eventually does raise all prices. We're looking at a PPI, CPI, both came in higher. Even though they're lower than they were expected to be, they are still increasing. So there's still increase in inflation, prices going up on all assets. So suggestion there, not financial advice, stack real assets, precious metals, commodities, etc. So with this, I'd like to speak a little bit about the calendar today. We've got, since the bond market is closed, Fed Governor Waller will be speaking later. And then tomorrow morning, prior to the market open, we are getting a manufacturing survey as well as another Fed governor speaking. So with these, they manage the markets the direction that they would like to go. Now, with all of this going on, we've got a lot of things in the background between the natural disasters, or unnatural, however you look at them, with the hurricanes. Let's take a look at housing, because housing affects the what we call the wealth effect factor, and that basically guides a lot of how consumers spend. If they feel like their home is worth a lot of money, even if they aren't spending, they feel like they're in a much better financial position and will be easier about being consumers. So with this, we've got market rates rising again, even though the Fed cut the rates. So what is behind this is a lot of background working. Now, this comes from Altos Research. It is a national single family inventory trend. And what it's showing is we've got a slight decline in the inventory going on. Now, the issue with this is that it is not taking into account lower demand, if that comes through. So we see this on another side in some other reports. But for now, I would just like to point out that market rates rising again, even though the Fed is cutting. So with this, we've also got banks as an issue, because the loans that they are giving out for mortgages has a strong effect as well on the demand side. Now, we've got a new report saying basically that there are massive potential losses for the financial institutions, talking about potential bank failure in a quote. And I'll speak more about banks in a moment. But what we're looking at with housing, we've got valuations coming out from the larger companies that basically do this. Zillow, Redfin, and Chase. They're all over the map, sometimes varying 20% or more in their estimations of value, and how these tools both help and hinder buyers in an unpredictable housing market. Now, more than helping buyers, because this gives them basically negotiation room with the sellers, what's going on in the background is these are major fluctuations. And this is basically major amounts of instability in the markets, and very instability is a lot of volatility. Also, will bring fear into this market, working very similar, but in a slower timetable than stock markets. So, a little bit more about the banks, as I was saying, that I wanted to speak about because we've got more bank earnings coming out. JP Morgan Chase saying that there's more credit headwinds. Now, this is because uh, all of the basically the interest rates wreaking havoc with them. They've got more credit costs for this third quarter, and they're saying that this includes a reserve build of $1 billion. So the increased requirements of reserve, they're basically saying they're taking a credit hit. Now, I'm not worried about JP Morgan Chase. They're a mega bank. They can handle all of this. What we do need to look at is what this means for all of the smaller, mid-sized banks. Now, a couple of things with this. We had Citigroup basically taking a hit earlier in the year. They are pairing with MasterCard, and they're instilling a global payments partnership. Now, we spoke a lot about this the other day as far as CBDCs. This is another method where they're basically all getting on board. Okay. Another bank we're looking at, Wells Fargo, nearing a trough in their deposit costs after the Fed's rate cut. They're also another mega bank. Basically, their scale hasn't made it immune from deposit wars, and this is hitting their profits as well. It's basically what they're saying. So they're having issues. Watching other banks reporting, we just had TD Bank, basically Canadian bank, getting hit. They're pulling back. So we're watching slowly but surely all of these consolidations in the smaller banks. We're going to start hearing about those a little bit more, although I suspect that the mainstream media will majorly play those down. So you may not hear about those in mainstream media, but I'll be bringing those to your attention. So we had Kobesi letter come out talking about the odds of rate cuts coming forward, and basically what we've got the market looking at right now, possibly 2 quarter points, but not much more than that. We're also watching the dollar rebound on the back of this, so we'll see how this effect is on the market. Now we've got a little bit more of a shadow issue, and why I say it's a shadow issue is because it's basically private credit. Now, private credit is not reported, hence private credit, in a lot of the broader terms that they watch these as far as they do with the larger banks. So, corporate debt's mounting as credit funds allow the borrowers to defer payments. Now, this is in private credit, and where the problem lies with this is they are basically allowing them to defer the payments, adding to their balances and increasing the interest basically that they are paying. So if they can't pay it now and they're increasing it, will they be able to pay it later? Because these corporations are still taking massive hits. Shifting now to, we've got a little bit more corporate news. Speaking about Boeing laying off the thousands of workers. This was 17,000 workers. We were talking about this prior. Now they're warning of quarterly losses and weaker sales. They're showing major support in their company at the 120 level, and then really major COVID lows, which I don't think will hit again right about the $100 level. But with this, I would like to say they've got a lot of war economy under their belt. They have just pulled a couple of government contracts that are very quiet, and in the background, you're not hearing about those either. But in the meantime, globally, war is ramping up. We're very much a war economy. And with this, we've got a few stories that are ramping up with this. We've got NATO launching nuclear drills in Western Europe. And this is really a hot sector that it's not good at all. Escalations happening everywhere, also in the East. Taiwan convening security meeting because Beijing held blockade drills right off the island. So basically, major escalation there. And United States, this one is really about the worst because we're hitting three different areas at the same time. They're sending missile defense systems as well as ground troops, American blood, American troops, to run this defense system going to Israel in defense against Iran. So provocations happening against Iran, Middle East in general, as well as Russia, because they are also bolstering NATO. So, of course, that is not making Russia happy. Okay, with this, I've got a few other things I would like to bring up. This one, the home insurer of last resort in Florida in serious trouble. Will Milton put this over the edge? Now, this ties in with the housing as the insurance costs. Basically, they're taking all of these costs and they're going to spread it to every homeowner that has insurance in the state. Very negative for housing. With this, they also, along again with the hurricane responders, this is more in North Carolina where this happened. But FEMA and any government aid that they gave back home domestically, now they're blaming that there is armed militia hunting FEMA and using this as an excuse to evacuate any government aid in the area. So they're saying basically that they had come across a couple of trucks of quote unquote armed militia saying that they were out to hunt FEMA. And with this, the incident management team of FEMA have notified they're coordinating evacuation of all assigned personnel for that county. So the little aid they were giving, they are now pulling out. So just to let you know on that, that they're afraid of basically everything but ready to go to war on foreign soil. So with this, it's all part of the division that they are building prior to this election that is less than 3 weeks away now. We had former president saying that Black men's support for one particular candidate is not acceptable. Now, my question here is if we had another former president, say for instance Bush, come out and say that it's not important or not acceptable for men to vote for the other candidate simply because she's a woman, or worse, say that it's not acceptable because they're white, it could probably be taken a completely different way. So I find this unacceptable division of the country. These politics are getting absolutely horrendous. Not watching a lot of these anymore, but it's inundating us. You're getting this every day. So if this hits you a certain way, it's probably meant to. So with this, I'd like to stop on a positive note. Had an engineering feat, basically SpaceX cut a Starship rocket booster back at the launch pad where it came back from. So just making advancements in this sector. Are we going to a space war? Possibly. We are losing our freedom of speech and everything else going on. So why not with that sector too? So with this, I wish you all a great trading day. Hope you all make millions. And until I see you again, stay free.